Hello. Today's presentation will give you a brief overview on business taxes in Estonia. The agenda is as follows. Firstly, we will talk about tax deadlines, when to submit and how to avoid penalties. Secondly, we will talk about corporate income tax, how it works in Estonia. Thirdly, very hot topic, salary versus dividend. And last but not least, we will give you an overview on investment account. Let us start with tax deadlines. Mainly, there are two declarations, Form TSD and Form of KMD. Form of TSD. The deadline is by the 10th of the day of the month following the month the payment was made. And this declaration includes a summary form and annexes. The second declaration, Form of KMD, it includes value-added tax, and the deadline is 20th day of the month following the taxable period. To sum up with, there are two main deadlines, 10th of the day and 20th of the day, the most important days for the taxpayers. And that brings us to possibilities for submitting the declaration. The declaration can be submitted in the eMTA by either entering data manually or uploading as a file. The declaration may be uploaded as an XML file, in a single file, or separately by annexes. In addition, annexes 1 and 2 and the inf1 form can also be imported from a CSV file after the declaration has been formed. And the declaration can also be submitted via XT. And last but not least, there is also a possibility to submit declaration on paper, but only if there are up to 5 rows. That means if there are only up to 5 salary receivers. If there are more than 5 salary receivers, then one has to submit electronically. Possibilities to pay taxes. In Estonia, it is very, very easy and convenient to pay taxes. It can be made by payment order in bank, by a bank link in e-tax board, also by credit card payment in e-tax board, by e-invoice for land tax. And all these payments will be in Estonian and Tax and Customs Board instantly, as easy as that. And lastly, there is also possibility to pay in cash, but only on state border. And it is less than 1% of payments. It's very exceptional. So keep in mind that it is very easy and convenient to pay taxes. Payment of interest. One has to keep in mind that until full payment of tax arrears, the arrears are subject to daily interest rate of 0.06%. It is almost 22% a year. And amount of interest, it has to be multiplied by the days of delay. And the sum is quite high. Moreover, interest payments are subject to income tax at the rate of 22/78. And on the right side of the slide, one can see example. For instance, company had a tax debt in sum of 10,000 euros for 1 year, 360 days. Interest would be 2,160 euros. In addition to interest, one has to pay income tax, 22 by 78 times interest, 2,160, and the additional income tax would be 609.23 euros. That brings us to the total expense of 2,769.23 euros. It is almost 28%. So, in order to avoid costly interest payments and additional income tax, it is advised to pay all your obligations in time. And let us remember that there are two main deadlines for the form of TSD, the 10th of the month, and for the form of KMD, 20th of the month. Don't be late. Payment of tax liabilities in installments. If your company is experiencing temporary difficulties in meeting tax liabilities, it is possible to apply for deferral, that is payment in installments. It is possible to apply for a schedule with both regular and irregular payments. But when applying for a schedule with irregular installments, the last installment may not exceed 50% of the total debt covered by the schedule. And if you do not comply with these conditions, Estonian Tax and Customs Board will revoke the deferral decision and the interest rate reduction. So if one concludes payment of tax liabilities in installments, all conditions ought to be met. And that brings us to corporate income tax. The tax system in Estonia consists of state taxes provided in and imposed by acts concerning taxes. The state taxes are income tax, social tax, land tax, gambling tax, value-added tax, customs duty, heavy goods vehicle tax, and business income tax. More information about both taxes in English is available on our website for Income Tax Act and Business Income Tax. And what is interesting about corporate income tax in Estonia? It is a unique system because tax liability arises only when companies have distributed their profit. For example, paying dividends to investors or making other equity payments. Moreover, the income tax liability arises when a company has made expenses which are not related to business. For example, when gifts are given, donations are made, or other unrelated expenses are made. And in this case, corporate income tax liability arises. All payments are taxed at the same rate of 22 by 78. It is 28.21%. In addition to income tax, fringe benefits are subject to social tax, 33%. What is more, Estonian tax system is flat. That is, we do not have progressive systems like many jurisdictions all over the world. And what is good? If the company reinvests its profit, there is no tax liability. So it is very convenient for investment climate. It is easy to meet your tax liability in Estonia because everything can be done on computers. One has to log in at the website and all returns can be submitted there. We have an established form of TST to meet corporate income tax liability. This form TST consists of 8 annexes, which include income tax, social tax, and all labor taxes. And don't worry, all sums are calculated automatically. So don't bother your mind with calculations. Everything is automated. More information about TST is available at our website. So there are 8 annexes form of TST. It includes income tax, social tax, and all labor taxes. Firstly, there is Annex 1, payments made to resident natural person, that is employees. Annex 2, payments made to non-resident natural and legal person. Annex 3, profit taken out of permanent establishment of a non-resident legal person. Annex 4, fringe benefit. As it was said before, fringe benefits are subject to income tax and social tax. Annex 5, gifts, donations, and entertainment expenses. Gifts, donations, and entertainment expenses are subject to income tax. Annex 6, expenses unrelated to business and statutory activity. These are subject to income tax. Annex 7, dividends and other profit distributions, payments of equity. In case of Annex 7, also Inf 1 has to be submitted. It is disclosure of recipients of dividends, other profit distributions, and payments of equity. Annex 8, income received from international carriage of goods and passengers by sea. And more information about TST is also available at our website. And the final tax liability will be calculated on form TST, which consists of the aforementioned 8 annexes. One has to fill in only needed annexes. That is, if one didn't have, for example, dividends, then Annex 7 doesn't have to be submitted. And that brings us to an example. For example, a company that manufactures goods. For example, company earned a profit of 4,000 euros. It purchased an equipment for 1,000 euros and had to make salary payments of 50,000 euros, but did not make any payments. And the question is, what will the company need to declare? What is the final tax liability and which annex has to be filled in? And the answer is that under those circumstances, there is nothing to fill in the tax returns and no tax liability will arise. That is because tax liability arises only when a company has distributed its profit. Because we have that kind of unique corporate income tax system in Estonia. Let's look at the second example. For example, a one-man company that invests in the stock market. Company distributed a profit of 100,000 euros as dividends. And life is good. And the director pays for a board member's vacation in the amount of 10,000 euros. What will the company need to declare? What is the final tax liability and which annex has to be filled in? because company distributed a profit of 100,000 euros as dividends. Annex 7 and Inf 1 ought to be submitted. And because a board member's vacation was compensated, Annex 4 has to be submitted. The total tax liability would be 35,256 euros and 41 cents. It is calculated as follows. 100,000 euros, the dividends, had to be multiplied by corporate income tax 22 by 78 and has to be declared in Annex 7. Keep in mind that one has to declare only the sum of dividends, 100,000 euros, and everything else would be calculated automatically. Fringe benefits, 7,051.28 euros from the fringe benefit has to be declared in Annex 4, and the tax is the sum of income tax and social tax. And one has to declare only one number in the Annex 4, that is 10,000 euros. And the system would calculate automatically the income tax and the social tax. So very easy and convenient to declare and to pay. And very hot topic, dividend versus salary. It had provoked a lot of reflection. Salary versus dividend. Salaries are subject to labor taxes. For instance, income tax 22%, social tax 33%, unemployment insurance premiums 0.8% for employers and 1.6% for employees, and funded pension contributions 2%. So salaries are subject to labor taxes, whereas dividends are subject only to corporate income tax of 22 by 78. And the difference between tax cost is enormous. For example, in case of salary of 2,500 euros, salary is subject to income tax 705.13 euros, social tax more than 1,000 euros, and unemployment insurance premiums 53.20 euros and 26.60 euros for employer, and funded pension contributions 66 euros 50 cents, and total taxes in case of salary of 2,500 euros, total taxes would be almost 2,000 euros, whereas in case of dividend of the same amount of 2,500 euros is subject only to corporate income tax, 705 euros and 30 cents. The message of Estonian Tax and Customs Board is that dividend may not replace salary. Paying dividends instead of salary is not allowed for tax purposes. Employees, management board members have to receive remuneration for their employment-related work. If a management board member receives dividends instead of remuneration, or employee receives dividends instead of salary, at some point a call or an email from the Tax and Customs Board is highly likely. it is not mandatory for a company to pay salaries, but bear in mind that if you do not have any other source of income and you actively work in the company on a daily basis, then you should pay yourself a salary at the market rate. And there is a substance over form principle. There is a substance over form provision in the Taxation Act, which gives us the ultimate opportunity to tax everything based on content, not on form. For example, if a board member works actively and has only one source of income, for example, 3,000 euros, and he declares this in form of dividends every month, then it is very, very likely that we would call and ask to declare this as salary. And one can see Section 84, transactions and acts performed for purposes of tax evasion. It gives us the aforementioned opportunity to tax everything based on content, not on form. And what can be done to keep your tax matter in order? Estonian Tax and Customs Board has reference data on average salaries for different positions. The website is available on the link. Average wages in Estonia have been observed on a post basis from the month of publication of the data during the last 12 months. The Estonian Tax and Customs Board makes calculations on a monthly basis and calculates the average remuneration for employees with an employment contract and persons working on the basis of other contracts. And the calculation is based on declared payments made by at least 100 employers to 100 persons. If this criterion is not met, we will display data at the level of the group of occupations. So one can compare salaries. And if one's salary is lower than the average, the appropriate conclusion could be made. And that brings us to investment account. Investment account is cash account and securities account. Investment account allows deferring the payment of income tax on reinvested securities, interest, and dividend income. The opening and closing of an investment account is declaring a bank account, international bank account number, details of an account opened with payment institution or e-money institution or investment firm in the income tax return. An investment account can be opened at a bank, at a payment institution, at an e-money institution, at an investment firm. And financial assets. Financial assets are debt security, foreign exchange spot contract, crowdfunding loan and participation, margin loan, also covered bond and crypto assets. One has to declare contributions to and payments from an investment account. So all moves should be declared in and out. taxed dividends and interests are taken into account as a contribution. However, untaxed dividends and interests are not taken into account. If you have questions, then it is advised to visit our website emta.ee, and one can find appropriate data about as a private client or business client, and everything is very thoroughly written. Thank you for your attention. And if you have questions, it is also possible to write at ariclient@emta.ee.